Eaton is a company that reported amazing numbers. Stock's still down 20%. But talk about that. I know you listened to the call. I know that got you excited, and that's also holding one of our portfolios.
Yeah, Eaton, they're a powering business worldwide. They're a power management company. And it was interesting because when you read through this press release and or the conference call, you would not think that there's any talk of recession or slowdown in economics. Basically, from a global perspective, they do business in, I believe, over 170 countries or something like that. One big takeaway is when you look at it's always interesting, Frank, from my perspective, to read through some earnings and then check the stock price. And you kind of guess as you're reading through this, like, all right, that's a positive, that's a negative. And you think, flip a coin because earnings are always a toss-up. But the stock basically was flat. I think it might even closed a little bit down. They recorded second quarter earnings per share of $1.50. Numbers are tough to follow here, so you can ignore those. The takeaway here is it's a record quarterly adjusted earnings. Now, that was up 9% over 2021. Adjusted earnings just mean you have to factor in some one-offs and or different items that you don't normally plan on all the time on a consecutive basis. They're divesting some of the businesses as well. So it's not as clear as waters where you were just vacationing probably, Frank, but It's still a good takeaway. Record quarterly segment margins at 20%. That was a 1.5% increase. They had 11% organic growth, and they raised full year organic growth and adjusted earnings per share for their guidance. Now, cutting through all this, what was hilarious is that the question and answer started, Frank. And anybody that reads conference calls, a little hint I give, the beginning of the conference call when you have the big wigs talking is going to be mostly positive, right, Frank? And it should be. You want somebody to give you the good information.
Of course.
So just skim through all the way to the questions and answer. First question, Frank, check this out. So the results were very good, okay? And it kind of took people by surprise. Question from Bank of America says, the view among investors right now, right or wrong, is that we're seeing an economic downturn soon. So would your electrical incremental margins perform, and the electrical business did great for Eaton, that's why he's asking this, in an environment where a majority of revenue growth is from pricing versus sort of nominal goods periods and balancing volume. All that is kind of a nice way to say what, Frank? Hey, we're going into a recession. What the hell's going on? Can this really keep up? Mm-hmm. I'll fast forward through the answer there because it was a positive and just said this. I want to point out another one. Another analyst says, this is from Melius Research. I'm not sure who that is, but this analyst says, okay, he says, this all sounds super positive. In fact, almost too positive. I have to ask a question here. Do you have a sense of where investments are in each of your key end markets? And if there's a little bit of a buildup going on here, takeaway, you're basically asking the CEO of this huge company who's doing record profits, hey, what about the recession? Everything's slowing down. You guys can't be increasing margins.
Is it sustainable?
Yeah. Is it sustainable? And the CEO keeps basically saying, yeah, I know it feels too good to be true, but yes, we see strong growth. We see strong momentum. They're growing basically every business. They're talking about how their electrical components business is done on a project base, meaning people aren't spending money on these components because they're going to do this in 6 months. Mm-hmm. They're doing it right now. Mm-hmm. And now the tough question is, okay, is the CEO and management team of Eaton just a bunch of cheerleaders and they're basically lying? Or are they just telling you what the data tells you? And from an investor, that's one of the reasons why investing is just as hard as golf. And I mean golf from a mental perspective, Frank, because when you're seeing the world around you yell and scream recession, and you have a company in the heart of things on a global economy talking about strength and growing their businesses and growing market share, I just can't believe the stock was flat to down. If you read through these earnings results and this conference call transcript, I don't know how the stock doesn't pop. It's pulled off its highs. Did you say it's down 20% from its recent highs?
It's down 20% from its recent highs. So now that you're saying that, so here, guys, if you're looking at the YouTube page, let me show you what I'm doing right now. So, I'm just showing you a chart of Eaton right now on CNBC. Again, symbol ETN, and you could follow along and just showing, year to date, it's let me put this back up. So year to date, we're still down about 20%. 175 was its high. It's about 147 right now. You've seen a big bump where 2 weeks ago it was 125, and you're already at 147. So, again, the whole entire market really came back. But this is a company, even if he's bullshitting, and which again, that's what the person on the conference call, and just to bring you guys in perspective here when it comes to conference calls, everybody gets to listen to them, but you have the analysts from Bank of America. Those sell-side analysts are the ones that ask questions, and you can find the transcripts for free in so many places. Just Google them and you can read them. So, some of these questions are good. That's where the meat is, and they're, questioning if this could continue. The stock is still down, and you're looking at margins through the roof. Maybe margins come down. I can see it still pays a 2.2% dividend yield, but we'll look at a forward P of under 20. So we're not looking at a company that's very, very expensive. It's a company that is growing revenue, growing sales, has huge margins, it's seeing business, but strong business. But for me, the next thing I want to do is, now that you're saying that, I brought up, and this what we pay for is Capital IQ. And so I'll go into Eaton Corp and I'll go into segments and I change it to percentages just to see where some of the revenues are coming from. You see Electrical America is one of the divisions. So is Electrical Global. I'll try to make this a little bigger for everybody. Give me a second. Again, you can follow us on YouTube for free, guys. But I'm explaining because I know a lot of people have it through YouTube or listen to this through iTunes. So you're looking at aerospace, a decent market, and all these things are pretty much up year over year, and not just up tremendously. But you're looking at, it's not record revenue. It might be in a record quarter. This is annually, but I want to see where a lot of this business is coming from. And you're seeing the revenue is coming. U.S. is 10 billion, and out of the 19, but it's about 50%. So they're doing good across the board. They have a big presence in Europe, which is interesting. Electrical components in Europe, I guess, are killing it because everything in Europe seems to be getting crushed right now. Yeah,
and they are seeing some weakness over this. Not as strong as other ones, but yeah, they have a good print there.
Even with currency issues we talk about, when you're doing a lot of business overseas, it could hurt you. That's why you've seen a lot of companies say X currency, reporting X currency. We haven't seen it with these guys, but look, their business seems like they're doing very, very well across the board. They look like they're diversified here. Their margins are strong. That question is justified, Daniel. Like, could this continue?
Oh, they absolutely are.
Being, listen, with CEOs right there, when you say, can this continue? I'm going to tell you, right? So you're down 20. You always want to be optimistic because the last thing, not always be optimistic, but you don't want to be overly optimistic and miss your numbers because that's when analysts get pissed off and you're going to get a ton of downgrades and you catch them off sides and they look like assholes and they hate that. They hate that, the analysts. So for him to say this with the stock down 20%, and a lot of companies saying, listen, we can't really predict the future. We know inflation, what the Fed's going to do and all this. It was your chance to warn and be conservative, and they weren't. They weren't overly optimistic, though, Daniel. I mean, I saw the numbers where they came in. They said, listen, this is what we're expecting. And it basically met the estimates, the projections. Mm-hmm. So it wasn't like we're blowing them out, but they just said, hey, these are the estimates right now. This is what we're expecting. They have a nice yield, nice business model. They're seeing demand, and it was a chance for the CEO to really temper that down. And the fact that he didn't is good news because he wouldn't have got punished for it. He's just like, this is what I'm seeing right now. And these guys really project. They've been around forever. They've been through ups and downs. So, right now I believe them and probably a good time to buy the stock, especially that it's still down 20% off its highs. It's not really expensive, trading a little bit of premium to the overall market, paying a nice dividend. But this is a company that's in a prime spot in the market where it's seeing strong revenue growth, strong earnings growth, and their margins are being maintained right now. So that pricing power.
And it's still dealing with the world problems that everybody else is. They note on the conference call that, hey, we're still dealing with supply chain issues. Some of the sales would have been better if we could have gotten all the components or all the materials needed. They have a record backlog. You need to take that with a grain of salt because backlog just means future orders on the books that you'll turn into revenue at a later date. However, that's going to naturally go up if you have supply chains affecting you getting components to do the job. Obviously, that's going to go back to the backlog, so you can take that with some salt. But overall, those numbers didn't match up with a crazy slowing economy, so we're going to have to watch this unfold. But as I would say, when I was reading through these numbers, it was hard not to get bullish about this stock because, yes, the CEO is bullish, but he wasn't overly bullish. And when you have a company like this with a pulse on the economy from a global perspective, it's definitely one everybody needs to pay attention to. And it's been a solid, it's in our Curzio Research Advisory portfolio, and it's up a little bit. Obviously, it's not up as much as it used to be as it's pulled back with the overall market. But this isn't a company that you can't sleep at night if you own shares, Frank. It's all about sleeping well at night.
It is.
I say that because I know you're dead tired.
No, I know. I am dead tired. But it was funny because I saw MicroStrategy CEO come on and he was talking about Bitcoin and he was really cool about it. He wasn't, this arrogant guy that's, you got to buy Bitcoin. Are you crazy? Like, he just made sense when talking about Bitcoin and being very transparent. But this is a quarter where you have to listen to these conference calls. You listen to the transparency from these guys going through the situation. What are they cutting back? Some companies are cutting back sharply. You saw Robinhood again lay off more employees. Some businesses are doing that more than often, especially in technology. So this is a chance to really dial down the businesses, how they're cutting costs. And remember, business is terrible right now. Stocks are down tremendously still, even though a lot of them are up off their highs. We're seeing still they're down 20% off their highs, right? I mean, they've come off their lows pretty sharply over the past couple of weeks with the market bouncing back, but they're still down 20% plus. A lot of these names, some of them down 30, 40% plus. And now they're cutting costs. So now when you cut costs, your earnings are automatically going to be pretty strong, much, much stronger, right? You're cutting, salaries, expenses, you're going to take charges on that. But now look 6 months from now. Now you're a lean business. And say 6 months from now, the Fed's like, look, we're done and we're going to start lowering rates. Now you have a business that's lean, that's cheap, and now business is going to start to come back. That's when you see these things absolutely explode. So you need to pay attention to these conference calls and listen to these companies, because as they're cutting back, there's going to be lots and lots of great opportunities once business starts getting better for these companies. And it will, right? A lot of this stuff is cyclical, goes up and down, up and down. We saw that in oil. We see that in a lot of consumer names. We see that all across the board. But that's the chance to really buy some of these names when they're cutting costs. They're going to be lean. Yes, business is weak, but the stock's going to fall 20, 30, 40%. Some of these names are getting nailed. And a lot of times when business does come back, I mean, look at crypto. Crypto's starting to bounce back a little bit, 23,000, 24,000. Again, it was a lot higher, I know, and people don't look back when it was trading $40 10 years ago, or even, $6,000 5 years ago, 4 years ago. But a lot of those crypto names, as it bounces back and you see more trading coming in and more institutions and more regulation coming, more institutions coming into this market, you're looking at the Robinhoods, you're looking at the Roblox, you're looking at a lot of these names within crypto, within the metaverse. I mean, they've gotten hit so hard that these are the names that will bounce back tremendously, especially now that becoming lean and going through this, change in business sentiment and cycle really for the first time. Some of these companies this big, where they have to, learn how to cut costs. And again, they're going to be lean. And when business returns back to normal in some of these industries, you're going to really see these things take off.